Hello there. We're going to look at one topic that seems to be quite a challenge to many foundation students: issue and forfeiture of shares. Every exam, every exam, we have seen questions of 15 marks, if not 15, 10 marks. And that is a substantial amount. And why do students not be able to answer questions from this topic? Let me tell you, the approach that matters. The way you look at this topic that matters. Some of us are so allergic to journal entries, and this chapter seems to be full of journal entries. I wish that I make it simple for you. And in this course of my teaching you, I hope to make it simple and understandable. I want each one of you to become expert in issue and forfeiture of shares and hit it in the examination. All right? So let's look at it. We're talking about issue and forfeiture of shares. And we start with what exactly do you mean by the word share? What is a share? Obviously, it is a share in the share capital of a company. That's what Companies Act also tells you. But if you look carefully in the material, they have actually defined a share. It is an indivisible unit in the share capital. An indivisible unit. That means there cannot be smaller part than what it is. It could be a 1 rupee share, it could be a 2 rupee share, it could be a 5 rupee, a 10 rupee, or a 100 rupee share. Whatever. As defined in the Memorandum of Association. Yeah, you remember the share capital clause? There, they will define what the capital is going to be, how it is going to be, what is the nominal value per share. I'll tell you more about it very soon. The share capital of a company, every business entity needs capital. The sole proprietor has his capital account. Partners have their capital accounts. LLP partners have their capital accounts. In a company, I can't have individual account for all the shareholders. I have a collective account called share capital account. And the share capital account could represent sometimes lakhs, if not millions, of shareholders. So this share capital will be classified as follows. One, the authorized capital, issued capital, subscribed capital, called up capital, paid up capital. I'm going to explain each one of them. This is for knowledge sake. Okay? So let's understand authorized capital first. As the word suggests, authorized. Who authorizes is the first question. When you pay money to the registrar of companies, the government official who undertakes the registration of companies is called registrar of companies. He goes according to your application. It is the memorandum and articles of the company that authorize the shareholders to collect this money. That is why it is called the authorized capital. It is there in their capital clause. Okay? It is also known as registered capital because the registrar of companies has accepted your company's registration with this amount of capital. The fees for registration depends on the amount of capital. That is why it is called registered capital. It is also called the nominal capital because name-wise, it is a 5 lakh company, it is a 10 lakh company, it is a 5 crore company, it is a 100 crore company, so nominal capital. So remember, authorized capital is the same as registered capital or nominal capital. This is the maximum amount that the company can raise from shareholders as capital. maximum amount. Okay, it is mentioned, as I said earlier, in the capital clause of the memorandum of association, and it is shown only in notes to accounts as information to the readers, to the users of accounts. Okay, next we go to issued capital. Issued capital is a part of the authorized capital that is offered to the various persons. I didn't say people, even persons. Artificial people also can apply for shares. Okay, so offered to persons for subscriptions. They can apply for these shares and become shareholders of the company. So how many shares are offered for subscription is called the issued capital. Now, based on the issued capital, we have the subscribed capital. We have offered 1 lakh shares. People can take up 95,000, 96,000, 97,000, 99,999, or even 1 lakh. Not 1 lakh one, because we didn't offer that. So subscribed capital is a part of the issued capital that is actually taken up by the shareholders. Okay. Finally, the called up capital. What is called up? Look, we have got commitment from the shareholders that they are willing to take up the shares. They have promised that they will pay for the share capital. Now we will ask them, okay, you have promised, please pay so much towards that. We will collect the balance later. So whatever we ask the shareholders to pay is called up capital, a part of the subscribed capital which has been made due for payments, which the shareholders are obliged to pay. Okay? And finally, the paid up capital. Paid up capital is that part which is actually paid by the shareholders towards their shares. The difference between called up capital and paid up capital is called calls in arrears. The difference between called up capital and paid up capital is calls in arrears. Meaning calls in arrears called up capital minus calls in arrears is equal to paid up capital. Okay. Now, there is one more term that is given in the textbook which you should know for the 2-mark question. It is called reserve share capital. Now, what is exactly a reserve share capital? Look, the company wants to give confidence to the investors. The company wants people to believe that it is financially strong. So if it says, look, I have the capacity to ask for 5 crore, but I don't need 5 crore. I am happy with 4 crore. 1 crore I will not call unless I am going to close down. So public will get impressed. Oh, this company is strong in 4 crores only. You feel that this company has become very strong. So reserve capital is a part of the issued and subscribed capital, which the company, by passing a resolution, decide that it will not be called up unless the company goes under liquidation. So it only shows the financial strength of a company. Such capital is called reserve capital. It will not be called up until it is required under liquidation time. Okay, good. Where would these items appear in the financial statement is a question. Where would authorized capital appear? Where would issued capital appear? Where would subscribed capital appear? Where would called up capital appear? All these authorized, issued, subscribed, called up will appear only as additional information in the notes to the balance sheet. They do not come in the face of the balance sheet. In the face of the balance sheet, only paid up capital will be appearing. In the face of the balance sheet, what will appear? Only what is paid up. अपने को पैसे से मतलब है कितना पैसा आया बैंक अकाउंट डेटर टू शेयर कैपिटल is what matters to us, right? Now let's look at this question. IS1. Apple Limited has been registered with the share capital consisting of 5 lakh equity shares of 10 each. They issued 40% of such capital for cash and 5% for a consideration of purchasing certain machinery. The amount payable to the shareholders was 7. The amount payable by the shareholders was 7 per share till date. Shareholders A and B holding 300 shares and 200 shares respectively have missed their first call of 2 rupees on the shares. Okay? From the information given below, you are required to answer the following. What is the authorized capital? What is the issued capital? What is the subscribed capital? What is the called up capital? What is the paid up capital? What is the calls in arrears? And what amount will appear in the balance sheet as share capital? So let's look at this question again. From this question, you are able to understand that shares can be issued not just for cash. Shares can also be issued to acquire some assets. Shares can be issued to acquire a company. Okay, so we can issue shares for a consideration other than cash. So shares are issued in two ways. One, for cash, or for a consideration other than cash. So let's start with what is the authorized capital. We are very clearly told it has been registered. Registered capital is authorized capital with 5 lakh shares of 10 each. So the answer here is registered with 5 lakh shares of 10 each. Therefore, authorized capital is so easy. How much? 50 lakhs. Rupees 50 lakhs. Okay, 5 lakh into 10, 50 lakh. Is it clear? 5 lakh shares and the face value of the share, nominal value of the share, par value of the share, face value, nominal value, par value of the share is taken into consideration, you get 50 lakhs. I hope authorized capital is clear. This comes under additional information for the company. Then, they issued 40% of capital for cash and 5% for buying a machinery. Okay. So my next question is, what is the issued capital? Okay. For cash, 40%. For machinery, 5%. Okay. So the question is, what is issued is 45% of rupees 50 lakhs. That was the authorized capital as per the previous slide, no? Of 50 lakhs. Therefore, issued capital is equal to 50 lakh into 45%, which is 22 lakh 50,000. Is this clear? Okay. That means 2 lakh 25,000 shares have been issued by the company. Clear? Okay. So now let's move on to what is the subscribed capital. Okay. The question says the amount payable by the shareholders was 7 per day. Nothing else is mentioned. So it means in this context, all shares issued have been taken up. Okay. They have been applied for. Therefore, issued capital in this context is equal to subscribed capital. Okay. Only in this case, it doesn't have to be the same always, but mostly it's the same, of course. It is the same as issued capital. Therefore, that is 22 lakh 50,000. ठीक है ना? Easy, right? Okay. Now let's move on to another question. What is the called up capital? Okay. Remember, there are two types. One issued for cash, one issued for machinery. That which was issued for cash, they have the amount payable by the shareholders is 7 per share. And the machinery one is fully paid. Okay, so the called up capital in cash 40%. What is 40%? That is 2 lakh shares at rupees 7 each. That would be rupees 14 lakhs. Okay, 2 lakh shares, 40%. 5 lakh ka 40% is 2 lakh, and amount payable by the shareholders is 7 rupees. So 2 lakh into 7, 14 lakh. And for machinery, okay, 5%, that is 25,000 shares at rupees 10 each. This would be 2 lakh 50,000. Therefore, the called up capital will be 16 lakh 50,000. Okay, total called up capital will be 16 lakh 50,000. Right? Easy. Yes. Let's go on. Paid up capital. Paid up capital means called up capital less calls in arrears. What is not paid. Is this okay? Our called up capital in the previous slide we know is 16 lakh 50,000. What is not paid? There are two shareholders. We are told that there are two shareholders, A and B, holding 300 and 200 shares. They did not pay 2 rupees on their calls. Okay, 2 rupees was not paid. Rest they have paid. Okay, so we will say A 300 shares plus B 200 shares. Okay, this is 500 shares. What is not paid? At rupees 2. This is not paid. That means 1,000 was not paid. So what is the paid up capital? Therefore, paid up capital is 16 lakh 49,000. Do you follow? Paid up capital is the actual amount paid by the shareholders towards their shares. I hope the example is clear. Okay, can I move on to the next question? The next question says, what are calls in arrears? Calls in arrears unpaid by A 300 into 2, which is 600, B 200 into 2, which is 400. Therefore, calls in arrears is 1,000. Okay, that portion which is not paid by the shareholder is called calls in arrears. Okay, 7 rupees. Till 7 rupees it is calls in arrears. After 7 till 10 it is not yet called. Okay, right. What amounts will appear in the balance sheet of a company? Okay, paid up capital of, how much was the paid up capital? 16 lakh 49,000 will appear on the face of the balance sheet. Rest will be shown as information, where in notes to accounts. Okay, notes to balance sheet or notes to accounts as we call it. It's a part of the financial statement, but they will not come in the face of the balance sheet. They will be shown under notes to accounts. Easy? Clear? So now that you have understood the classification of share capital, let us go to the next point, which is talking about the types of shares. Basically, there are two types of shares. One, the equity shares. Two, the preference shares. The equity shareholders are called the true owners of the company. Why are they called the true owners of the company? What do you mean by the term equity? Equity is what remains for the owners. Yes, equity is what remains for the owners. That means what do they have minus what they owe others. In the business, what remains is theirs. It is not necessarily just the capital amount. Take a sole proprietor, for example. He had invested 5 lakh to start the business. Now his assets are 10 lakhs, liabilities are 3 lakhs. So his capital becomes 7 lakh. That is his equity. Okay, 5 lakh plus a built up profit of 2 lakh. He's got 7 lakh as his equity. So equity means that it is called residual interest. Okay, equity is equal to residual interest in net assets. What do you mean by net assets? Okay, assets after paying off liabilities. Net assets of company after paying off all liabilities. External liabilities, जो भी पैसा देना है सबको दे दिया, बाकी जो बचा, that is belonging to the shareholders. That is called equity. Then why is this preference share there? Look, when the company wants some money, not for a long time, they want to give it back once it is used up. Because even payment for shares is expensive. Dividend. What do you pay the shareholders? We pay dividend. And dividend is the most expensive way of borrowals. Because the shareholders का मुंह है ना बहुत बड़ा होता है. इतना दिया तो next time और चाहिए, दिल मांगे more all the time. Therefore, they want to borrow capital, but they want to give back the capital when it's not required. Then they go for this temporary capital called preference shares. We learn about it soon under redemption of preference shares. We have another topic. There I will tell you more about this. But why the word preference? Because these shares have a preference over the equity shareholders on two matters. Which are the two matters? They have preference, okay, over dividend. Payment of dividend. Matlab, before you pay equity shareholders any dividend, you have to pay dividend to the preference shareholders first. Then, on liquidation, if your company closes down, band karna pada, for whatever reasons, first you will sell all your assets, pay off the liabilities, then before paying equity shareholders, you will pay preference shareholders. Okay, on liquidation, before equity shareholders. That is why they are called preference shareholders. So for you in this topic, it doesn't make a difference if it is an equity shareholder or a preference shareholder. If they say it is a preference shareholder, instead of equity share capital, you call it preference share capital. That's all. Nothing else. Just the name will change. Okay? Good. And there are some types of preference shareholder. Let me explain. Cumulative, non-cumulative. If you have promised the preference shareholders dividend, okay, dividend is an appropriation of profit. What do you mean by appropriation of profit? Only when there is profit, we pay dividend. Okay, but if you have told the preference shareholders, if I can't pay dividend of this year, I will pay to you next year. Along with the next year's dividend, I will pay you the previous year dividend also. That means the dividend accumulates year after year. Then it is called a cumulative preference share. But if you are told very clearly, Arey boss, this year I cannot pay dividend, forget it. Next year, if there is profit, I'll give you dividend of that year. It has nothing to do with the previous year. That is non-cumulative. So we have two types. Okay. Then participating, non-participating. Now what are these participating preference shareholders? In the equity balance. What is equity balance? Assets of the company minus external liabilities. What remains? You will first pay off preference shareholders. Okay, then on a fixed amount you pay equity shareholders. Still there is balance remaining. Normally this balance belongs to equity shareholders. But if the preference shareholders have a right in that, then they are called participating. If they have no right, they are called non-participating. And when nothing is mentioned, it is always a non-participating preference share. Okay? Let me go to the next one. Redeemable, non-redeemable. Redeemable means their repayment is fixed for a period of time. Remember one thing, all preference shares have to be redeemed within 20 years. Of course, some companies can go up to 30 years, but mostly all preference shares have got to be repaid. Redeem means repaid within 20 years. So when its date is fixed and clear that they're going to repay, it becomes a redeemable preference share. Non-redeemable means the date is not yet fixed. If you want to sell the share, you replace it to somebody else. Okay, you sell your share and get your money. That's all. Convertible and non-convertible. Convertible means these preference shares at a future date will be exchanged with equity shares. They will be converted into equity shares. Non-convertible, they are not going to be converted into equity shares. You will get your money back. Clear? Right. Only important for 2 marks theory point. Fine, don't forget. Now, how does the company collect money towards the share capital? The first journal entry that we have ever learned in accounts was mostly capital introduced by a proprietor. Capital means what is the entry? Bank account letter to capital account, to the proprietor's capital account. Okay. Even if the partner pays, we say bank account letter to partner's capital account. We'll write the name also to make sure whose capital it was. In a proprietary concern, we simply write capital account because there's only one proprietary concern, isn't it? But in a partnership, we'll have to specify which partner brought in that money. Here, the company wants money from many people. So it is only one share capital. Okay. And they would like to encourage many people to buy the shares. Okay. Many because their voting power does not dilute. Okay. It's better to have 10,000 shareholders applying for your share than just one shareholder applying for 10,000 shares. Tomorrow he'll buy you off. So therefore, they would like many people to apply. And how will many people apply? When you give them installments, when you give them the power to acquire the share gradually. So the installments are called application stage, allotment stage, call stage. So let's take, for example, you have a 10 rupee share. You can decide. Application can be 3 rupees, allotment can be 4 rupees, balance 3 rupees can be called in the call stage. Even in call stage, you can have one call, second call, final call, more, depending on the company. Company has got the option to do this. So, what are the 3 stages? Application stage, allotment stage, call stage. Okay? What is an allotment stage? People apply for the shares and then you decide who gets the shares or who does not, depending on the number of applications. So, allotment is the actual giving of shares to the applicants. Okay? It doesn't mean that when I apply, I should get the share. I am only offering to buy your shares. It's up to you whether you want to give me the shares or not. Okay? Right. Now, let's understand what is minimum subscription. Okay? When the company issues shares to the public, to the general public, okay, it cannot make any allotment of shares unless the minimum subscription amount as stated in the prospectus is received. From the Companies Act point of view, I will repeat, minimum subscription is the amount that is mentioned in the prospectus, and until you receive such amount, you cannot allot shares. If you don't receive that amount, you have to refund the money. You cannot allot shares. Okay? And the Companies Act says the application money should be at least 5% of the nominal value of the shares. So from the Companies Act point of view, 2 things I want to remember about minimum subscription. It is 1, minimum subscription is the amount that is mentioned in the prospectus. The share application money received by the company should be equal or more than the amount mentioned in the prospectus as minimum subscription. A company has the right to define its own minimum subscription. However, there is a small restriction. it should be at least 5% of the nominal value. So, for example, if your shares are of 100 rupees each, then 5 rupees should be the application money. 5% of the nominal value of the shares. However, SEBI has got a different rule. Who is SEBI? SEBI is a regulatory authority. Okay? Securities Exchange Board of India, they have a regulation. They say that the minimum subscription should be at least 90% of the shares issued. 90% of the shares issued should be your minimum subscriptions. Matlab, if you are issuing 5 lakh shares, 90% of 5 lakh is 4 lakh 50,000 must be applied for. People must apply for at least 4 lakh 50 or more than 4 lakh 50. Then you can go ahead and allot those shares. If not, you are supposed to return the money immediately. And there is a timeline for returning also. If your shares are not under return, you have 15 days of time. But if they are under return, you have 7 days of time. You will ask me, sir, ye under return kya hai? What is this under return? Look, there are persons available in the market who can give me guarantee. They are institutions. Okay? Non-banking financial companies mostly. They will assure the company. They say, we will guarantee that if the public don't apply, we will apply. And there is no such thing as a free meal. They will charge something for this. They get a commission for this. Underwriting commission, they earn underwriting commission. Okay? So, if the issue is underwritten, the money should be refunded in 15 days. If it is underwritten, it is 15 days. Not underwritten, it is 7 days. Sorry, the other way around. If the issue is not underwritten, 15 days. If it is underwritten, then 7 days. And the minimum amount is not 10% of the nominal, 5% of the nominal value. It is 25% of the issue price. Okay? Companies Act, it was 5% of nominal value. But under SEBI, it is 25% of the issue price. Sir, issue price kya hai? A company can issue shares at face value or face value plus premium. They cannot issue for discount. Okay. So, issue price is nothing but face value plus a premium. This premium we call it as securities premium. Okay. Total of that 25% is the minimum amount that should be made for share application money. Let's take an example. For example, let us say a company's share capital consists of shares of 100 each and they are issuing it to the public for a premium of 20%. So, issue price is 120. Okay. Total, this is the face value. This is the premium. Okay? Now, this will be the issue price, 120. So, the minimum application money should not be less than 25% of this, which is rupees 30. This should be the minimum share application amount. Okay? So, minimum subscription, Companies Act, as mentioned in the prospectus. SEBI, 90% of the shares issued. Minimum application money, Companies Act, 5% of nominal value. Minimum application money under SEBI, 25% of the issued price. If they don't meet minimum subscription, SEBI rule applies. SEBI says you should refund within 7 days if your shares had been underwritten. If they had not been underwritten, you get 15 days time to return them. Fine? Good. Shall we move on? Yes, please. Now, when we collect the money, we know there are 3 stages: application stage, allotment stage, and the call stage. There could be more than one call, remember. Every stage has 2 parts. One, due, other receipt. Okay? What is due? What should be paid is due part. And what is receipt part? What is actually paid. That is the receipt part. In the application stage, the receipt part comes first. Okay? Receipt, what is actually paid, then the due part is accounted for. Whereas in the allotment and call stage, the due part is accounted first, then the receipt part will come. Why? Because in the application stage, we are not sure how many will apply. Once they apply, we know definite, okay, they will pay. Okay? There is uncertainty before the application. Nobody can say how many people will apply for your shares, and therefore we will start our accounting when the money paisa dekha hamara accounting chalu. Okay? So depending on the money received, bank account debtor to share application account. I will talk to you about the general entries a little later, and then we will transfer the money to the share capital. So once again, in the 3 stages, how do you remember the pattern? Please don't memorize journal entries. We have to remember the pattern. Okay, what is the pattern here? The pattern here is for application stage, what is received is accounted first, then the due part. But in the allotment and call stage, the due part comes first, then the receipt part. Okay, so let's look at the journal entries. In the application stage, when I get the money, I start accounting. Bank account debtor to share application account. We open a temporary personal account called share application account. All the share application money which is put into a separate bank account is credited to this account. And from there, we push it to the share capital account. So what actually happens is, this is a temporary account, it gets cancelled, we come back to the original entry, bank to capital, bank account debtor to share capital account. So this is only a temporary account. So let's understand again, how do you start with the application stage? We say bank account debtor to share application, and then we say share application account debtor to share capital. Okay? So let's go to the allotment stage. Now allotment stage, due amount comes first. Therefore, share allotment account debtor to share capital. Okay? Then you will say bank account debtor to share allotment account. I'll repeat the due part first, share allotment account debtor to share capital. Then we say bank account debtor to share allotment account. Okay? Next. Again, allotment account is just a temporary personal account. It cancelled. You will end up with bank account to share capital account. Get the pattern in your mind. Comes very easy. Don't memorize. Don't ever memorize anything in the CA course. Understand the pattern. Remember the pattern. You'll get it so easily. Okay? How that applies, you should think of. Conceptual. In the call stage again, the due part, share call to share capital. Bank to share call. Due part, share call to share capital, bank to share call. Okay? Now, again, share call is a temporary account, it gets cancelled, it will be bank to share capital. Do you follow the pattern now? Okay. There can be more than one call. Could be share first call, share second call, share final call, depending on the question. You just follow the question. Okay? Thank you. Now, the types of subscription. At par means whatever you have offered, they have been applied for. Number of shares applied is equal to the number of shares issued. You asked for 1 lakh shares of 10 each, payable 2 rupees per share on application. You got applications for 1 lakh shares. Then it is at par. You asked for 1 lakh but did not get 1 lakh. You got little less than 1 lakh. 95,000, 96,000, but more than 90%. Then it is called under subscription. More than minimum subscription, but less than the number of shares issued will be under subscription. Over subscription, you asked for 1 lakh, you got more than 1 lakh, 1 lakh 20, 1 lakh 50, 2 lakh, 3 lakh, you got for that 1 lakh. Then it is over subscription. If you get under subscription, all your further accounting from application, allotment stage, call stage will depend on number of shares applied. Okay? But if you get over subscription, it will depend on the number of shares issued. Fine? When I do questions, I'll explain this further. Clear? Over subscription, under subscription. Let's look at question number 1. I'm talking about a situation where subscription is at par. Okay? TM Limited has an authorized capital of 50 lakh divided into shares of 10 each. It issues 3 lakh shares for subscription. Amount payable was as follows: 3 on application, 4 on allotment, 3 on call. So 3 plus 4 plus 3, 10. Applications were received for 3 lakh shares. You asked for 3 lakh, you got 3 lakh shares. On the 4th of May, all the applicants were allotted shares on 7th of May. The allotment money was due on 21st of May. All the allotment money due was received on 31st of May. The call money was due on 25th of June. All the call money was received except for 300 shares. Okay? Show journal entries for the above, assuming no calls in arrears account is open or calls in arrears account is open. So let's look at this question. How do you solve this? Okay? I'll go with first. I will say in the books of, okay? I will say in the books of TM Limited. In the books of TM Limited. Okay, I'll start with that. I have journal entries to be made. So, my journal entries columns. Here dates are given. So, it's important that you write the date column. You have 2 amount columns, debit column, credit column. This is the ledger folio column. Particulars, LF, debit, credit. Okay? सर आपने डीआर लिखा सीआर लिखा एग्जाम में मार्क्स कट करेंगे क्या? अरे यार छोड़ो ना, सब्सटेंस ओवर फॉर्म. They will not bother you for small things like this. Okay? Right. So, let's look at the first date. 4th of May, they got applications for 300. What have it remember? That I have 3 lakh shares issued and the scheme is 3 plus 4 plus 3. Okay? 4th and 7th. So, on May 4th, I will say bank account debtor. I will say bank account debtor. This is going to be 3 lakh shares into 3 each. I will get rupees 9 lakhs. 2 share application account. Correct. That is the amount to be written. Share application account, which also will be 9 lakh. B application money received. If you don't have time in the examination, itna kafi hai. Okay. But if you want to be technically right, on 3 lakh shares. Because whoever reads should understand the entry by looking at the narration. Okay. 3 lakh shares of 10 each at rupees 3 per share. The share is of 10 each, but I asked for 3 rupees and I got the 3 rupees. That's what I'm telling the reader. Okay? Then on May 7th, I will say share application account debtor to share capital. The application account has to be closed. It was a temporary personal account. I am closing it 9 lakh. Being application money transferred, being application money transferred. Easy, right? So I have finished application money received, application money due. Then I have to go to that allotment money. The allotment money was due on 21st of May. So on May 21, I will say share allotment account debtor. Okay, this would be 3 lakh shares into 4 per share, which is 12 lakh. Okay, 2 share capital, to share capital account. Okay, that also is 12 lakh, being allotment money due on 3 lakh shares at rupees 4 per share. ठीक है? We finished 3 entries. Allotment money due. Now we are still in the allotment stage. Allotment money received. The date was May 31st. So on May 31st, okay, I will say bank account debtor. Okay, I will say bank account debtor. Two, share allotment account. 12 lakhs, 3 lakh into 4. Okay, here you will say being allotment money, you can use the word duly received. Duly का मतलब क्या है? What was due has been fully received. There is nothing pending. Duly received. Received on the due date. Okay, full money received on the due date. 12 lakh. हो गया. Then we will find out the allotment date. Allotment date, the call date, sorry. Call date is 25th June. Okay, so June 25, share call account. There's only one call, so I'll just call it share call account debtor. How many shares are there? 3 lakh shares. What is the call amount per share? 3 rupees. 3 plus 4 plus 3. Okay? So 9 lakh was due in the call to share capital. Share call to share capital comes first. Due entry comes first. Like in allotment to share capital came first, then to bank to share allotment. Okay, 9 lakhs. Okay, being call money due on 3 lakh shares at rupees 3 per share. Okay, this is the call money due on, let's say, June. Okay, by June 25th we got the money. Bank account debtor, we are supposed to get 9 lakh, but we did not get the full amount. We are told one shareholder holding 300 shares did not pay. So he did not pay 300 into 3, 900 rupees. Okay. So I will say to share call account. Okay. This will be 8 lakh 99,100. Why? 2 lakh 99,700 paid on for 3 rupees per share. One shareholder holding 300 shares did not pay that. So this would be 899 100. Okay. This is being call money received on, I didn't say duly received on 2,99,700 shares at rupees 3 per share. I can also say being call money received except for 300 shares at 3 per share. Fine, no problem. Okay, but this is if no calls in arrears account. If no calls in arrears account is to be opened. Okay, and the last one, what if calls in arrears account is to be opened? If the calls in arrears account is to be opened, my entry will be on June 25th. I will say बैंक अकाउंट डेटर कितना था अमाउंट मेरा 899 100 calls in arrears account debtor. I'll open a new account called calls in arrears, okay, to show how much is due 900 to share call account 9 lakh. So there are two ways of doing it. Either you open a calls in arrears account or you don't open a calls in arrears account. So this was the first sum that we have worked out. I hope you are following this very clearly. Okay, we'll move on. So what happens if the number of shares applied is more than the number of shares issued? Example, you asked for applications of 5 lakh shares of application money 3 per share. You get 10 lakh applications. This is the case of oversubscription. Oversubscription means when the number of applications received exceeds the number of shares issued. So what do you do with the excess money? You cannot change your issue size. You have taken permission to issue 5 lakh shares, you got to stick to 5 lakh shares. The extra money, you have two options. One, you refund the extra money. Sorry, boss, le jao. Two, you give lesser number of shares to people who applied and use that excess money to adjust against further dues because they'll have to pay allotment, call, etc. So you can use the excess application money towards further dues. So what happens in the situation of oversubscription? Two things. The extra application money can be either refunded or we can adjust it against the further dues. Let's see a few problems based on this so you will understand what I'm talking about. It leads me to the concept of pro rata allotment. ये नाम सुनते ही some people will get an allergy. ये pro rata क्या है? Very simple. Pro rata in the same proportion. Okay? In the same proportion. Let's imagine that a dad comes home every day. He's got 4 children and he brings 8 toffees every day. Okay? Or let's make it 12 toffees every day. Right? So everybody gets 3 each. All the kids get 3 toffees each. Agreed? One day he could not get 12 toffees. He brought 8, but he will give them in the same proportion, equal to all. 2, 2, 2, 2. Distributing in the proportion in which the shares were applied is called pro rata. Okay. I'll give another example. Okay. Let's say a company issues for 1 lakh shares. Applications are invited for 1 lakh shares. But the subscriptions received were for 1,50,000 shares. And you want to make everybody happy. So what do? You will say for every 3 shares applied, I will give only 2. And that extra money that you paid me, I will use against the allotment dues. Are you following? So, this is a case of pro rata allotment. We'll do a question based on that so you'll understand it properly. Okay? For example, 2 lakh shares of 10 each, 3 was payable on application per share. It received applications for 3 lakh shares. It asked for 2 lakh. It got applications for 3 lakh shares. Now, the company wants to make everybody happy, wants to allot shares to all. In this case, it can allot 2 shares for every 3 applied. Okay? So if someone applies for 900 shares, he will get 600 shares. And the extra money that he has paid for 300 shares will be adjusted against the further dues of allotment. Make sense? Okay? Let's try it in a bigger sum. Let's look at this sum. Green Limited invited applications for 10,000 shares of 20 each payable as 5 on application and 6 on allotment. And the balance as and when required, they have not announced, but when we want, we'll collect. They have asked only for up to 11. 5 was on application, 6 was for allotment. Applications were received for 15,000 shares. The directors decided to allot on a pro rata basis and the excess to be adjusted against further dues. So they asked for 10,000. Okay, applications. Okay. Shares issued is 10,000. Applications received is how much? Applications received is 15,000 over subscription. Now directors want to give to everybody. Okay. So you have to give in this proportion. That means for every 3 applied, you will give 2 shares. Okay. So somebody applies for 600 shares, he will get 400. Okay. Now, based on the above information, answer the following questions. What is the application money received? So I'll go to 1. Application money received. For this, what we have to do? We have to see what is the number of applications received. The number of applications received is 15,000. Okay. What is the application amount per share? The application amount per share is 5. You see, 15,000 in 5. Okay? So how much would this be? Therefore, application money received is equal to rupees 75,000. Is that okay? First question was easy. Let's move on. Second question. What is the amount of excess application money refunded? Okay. Second question. How much was refunded? Okay. How much was refunded? They got extra application money of 5,000 shares. People were asked to apply for 10, but people applied for 15. So you got 5,000 into 5, 25,000 rupees is excess application money. But the question here is how much is refunded? Come on, take a guess. The answer is 0. Why 0? Look, they have said that the directors decided to allot on a pro rata basis and the excess to be adjusted against further dues. They are not going to refund. They are going to use the excess money to adjust against the allotment dues. Allotment dues are 6 rupees per share. Towards that we can use it. Okay? That means nothing is refunded as excess application money is adjusted against allotment dues. Okay? So my second question, what is the excess application money refunded? It is 0 because we are going to adjust the excess application money with allotment money due. Okay? Let's go to the third one. So what does the third one say? What is the amount of excess application money adjusted towards allotment? Okay, now comes my answer. Now is your answer, isn't it? Okay. The question is, what is the excess application money adjusted? Okay. What is the application money received? The application money received is 15,000 shares at 5 per share. It is 75,000. Okay. What is the application money due on shares issued? Shares issued were only 10,000 and they were supposed to pay only for 10,000 shares 5 rupees, 50,000. Therefore, excess application money adjusted is 25,000. Excess adjusted is 25,000. Is it clear? Okay. People applied for 15,000 when they were supposed to apply for 10,000. So 5,000 is extra. 5,000 shares, application money of 5 each, 25,000 will be extra money that will be adjusted towards the allotment dues. Okay. Let's go to the next question. What is the total amount due on allotment? Per share is 6. How many shares were issued? Only 10,000. Therefore, the total amount due on allotment will be 10,000 into 6, 60,000. Okay? Question number 4. Total money due on allotment. Okay, number of shares issued. Number of shares issued. Number of shares issued is 15,000. Okay. Sorry, 10,000. Number of shares issued is 10,000. Allotment money due. Per share is equal to rupees 6. Look here. Rupees 6. This is the allotment money due. Therefore, I will get total money due on allotment is equal to 60,000. Easy? Okay. One more question there. Let's look at it. What is the net due on allotment after adjusting the excess application money? Okay. So let's calculate net due on allotment. Okay. Total due on allotment is equal to 60,000. ठीक है? Excess application money adjusted is from the previous year we got 25. Okay. So I am going to adjust 25,000. That means the shareholders now don't have to pay 60,000 to me since they have already paid me 25,000. Now they have to pay me only 35,000. 60 minus 25, 35,000. This is net due on allotment. Net due on allotment is 35,000. Okay. Is this easy? Can I move on? I'm sure you like it now, isn't it? Let's see the next question. The next question is, okay, before I talk about the next question, let's talk about the securities premium. What do you mean by securities premium? Any amount that is to be collected over and above the nominal value of a share is called security premium. The excess amount exceeding the nominal value is called securities premium. Is there a limit for a company to charge securities premium? There is no limit. But a company will be sensible to say, what is my worth in the market? I'll find out and only ask for a little bit from that. Isn't it? So, how do you handle this? It can be used only for the following purposes. A securities premium can be used. The money that you collect on securities premium, there is a restriction. I can use it only for the following purposes. Section 52. Okay, what are those purposes? For issuing fully paid bonus shares to the shareholders. For writing off preliminary expenses. For writing off expenses, commission, discount on issue of shares or debentures. For providing premium on redemption of redeemable preference shares. And for purchasing its own shares on buyback. Okay. So how do I remember these 5 points? This is an important question from examination point of view. Okay. They ask this, they have asked once before, they could ask again. So how do I remember this? I identify a pattern. There are 2 write-offs and 3 provisions. 2 write-offs and 3 provision. The first write-off is to write off preliminary expenses, then write off expenses on issue of shares or debentures. Write off preliminary expenses, write off of expenses on issue of shares or debentures. Then what are the 3 provisions? To provide for payment of bonus shares. Okay. Provisions will be 1 for bonus shares, then for premium on redemption. When I repay my preference shares, I will give them something extra. That extra portion can be used from here. And the third provision is for buyback of equity shares. So once again, a securities premium account money can be used only for 5 purposes. Those 5 purposes include 2 write-offs and 3 provisions. Write-offs: 1, to write off preliminary expenses of the company, to write off expenses on issue of shares or debentures. Provisions: to provide for bonus shares issued, to provide for premium on redemption of preference shares, to provide for buyback of equity shares. Okay? Good. Now I have a big question coming, which is a past examination question. Very interesting. It came for 10 marks. It's called Piyush Limited. Piyush Limited is a company with an authorized share capital of rupees 2 crores in equity shares of 10 each, of which 15 lakh shares had been issued and fully paid up on 30th June 2018. The company proposes to make a further issue of 1,30,000 shares of 10 each at a price of 12, and the arrangements of payment as follows: 2 per share payable on application to be received by 1st July, allotment to be made on 10th July, and a further 5 rupees including premium to be payable. The final call for the balance to be made and the money to be received by 30th April 2019. The applications received were for 4,20,000 shares. They made a scheme of allotment and were dealt as follows. 1. The applicants of 20,000 shares were allotted in full. Out of the 4,20,000, 20,000 were allotted in full. Applicants for 1 lakh shares received an allotment of 1 share for every 2 applied. No money was returned to this application, the surplus application being used to reduce the money due on allotment. Third, the applicants of 3 lakh shares received an allotment of 1 share for every 5 shares applied. The money due on allotment was retained by the company, and anything exceeding allotment due was refunded. The money due on final call was received on due date. You are requested to record these transactions, including cash items, in the journal of Piyush Limited. So let's understand this question. The information in the beginning is actually unnecessary information for us. We are ultimately interested in how many shares are issued. The number of shares issued is going to be 1,30,000 shares issued. What is the issue price? Issue price is 10 share at 12 each. How do you want to collect it? You want to collect 2 on application, 2 application, 5 allotment, balance in final call. The total issue price is equal to 10 plus 2. 10 rupees towards the share, 2 rupees towards the premium. Application, you will collect 2 rupees. Okay, you want 12 rupees totally, application will collect 2. Allotment, you will collect 5, 2 plus 5, 7. So balance on call will also be 5. 12 minus 2 minus 5. This is 7. 12 minus 7 is 5. So final call is 5 rupees. Clear? We got applications for 4,20,000 shares. Okay? And we have made the following scheme. 20, 120, 420. How did you decide that? 20 get 20. 1 lakh get 1 share for 2 applied. So 1 lakh divided by 2, 50,000. So 20 plus 50, 70 already allotted. How much more I have got? 1 lakh 30 minus 70, 60,000. 3 lakh shares, 1 for every 5. 1 by 5 of 3 lakh is 60,000. I'll explain in writing. Okay? Let's understand the allotment scheme. Okay, so I'll call it working note 1. Analysis of allotment scheme. Analysis of allotment scheme. Now, some people applied. We are transferring this money to capital. We are going to adjust to allotment, and for some we are going to refund. Okay. There are three categories. 20 wale, 1 lakh wale, 3 lakh wale. Okay. That will give me 4 lakh 20. Okay. I can allot only 1 lakh 30 shares. Okay. So application money I am going to get is 8 lakh 40. 4 lakh 20 shares were applied for, and I will get 8 lakh 40. Out of the 8 lakh 40, I can allot only 1 lakh 30,000 shares, 2 lakh 60. So the balance, about 5 lakh 80, is excess application money. What am I going to do? In the first case, applied for 20,000, they got full. Okay, that means they gave you 20,000 into 2, 40,000. How much can you transfer to the allotment? This entire thing will go to capital. Nothing for allotment, nothing refunded, because there is no excess application money. Okay, in this case, there is no excess. So no adjustments. Second case, they applied for 1 lakh. Okay, allotted 1:2. That means when they gave you money, they gave you for 1 lakh into 2, rupees 2 lakh. They gave you rupees 2 lakh. Okay, how many shares you gave them? Only 50,000 shares. So towards the capital 2 rupees, only 1 lakh will be adjusted against application due. Now what is the excess application money? 2 lakh minus 1 lakh. How many shares they are holding? 50,000. 50,000 into 6, 3 lakh they have to pay towards allotment. But now the excess application money is only 1 lakh. So nothing is refunded in the case 2. Okay? Because we are told very clearly, applicants for 1 lakh share received allotment of 1 share for every 2 shares applied for. No money was returned, and the surplus was used towards reducing the amount due on allotment. So I did not return anything here. Okay, it is nil. I follow? Now let's go to the third case. Here we got applications for 3 lakh shares, and the scheme of allotment is 1 share for every 5 applied. That's what it is told to us. 3 lakh shares, 1 share for every 5 shares applied. Right? Therefore, when they gave me money, they gave me 3 lakh into 2, 6 lakh. Okay. Then I can give them only 3 lakh into 1 by 5. I will give them 60,000 shares. Like here, I gave them only 50,000 shares. So here I am giving them 60,000 shares. That means 60,000 into 2 is the application due of 1 lakh 20. 60,000 for allotment, they are supposed to pay 5 rupees each. So I will adjust that against allotment dues 3 lakh. Now they paid me 6 lakh minus 1 lakh 20 is for application due 4 lakh 80 minus 3 lakh for allotment due. Anything exceeding that is going to be refunded. So 6 lakh minus 1 lakh 20 minus 3 lakh, 1 lakh 80 is refunded. Okay. So now when I total, look, this 40,000, this 2 lakh, this 6 lakh is 8 lakh 40. This 40, this 1 lakh, this 120 is totally 2 lakh 60. Then this 1 lakh and this 3 lakh adjustment will be 4 lakh. Total money adjusted against allotment 4 lakhs. How much is refunded? 1 lakh 80,000. So this will match 8 lakh 40 minus 2 lakh 60 minus 4 lakh minus 1 lakh 80. This is the scheme of allotment. If you didn't understand it so clearly, you will. If you work out patiently, you will understand this chart. If you didn't, go to the journal entries. Don't overthink anywhere. Don't get stuck within the examination time. You have to keep moving on, because the more you move, the more points you will collect. So therefore, let's move on. Let's start passing journal entries and try to crack this sum by looking at another way. Okay. From this, I can do one thing. Bank account debtor to share application account for 8 lakh 40. Share application account debtor to share capital 2 lakh 60. To share allotment 4 lakh. To bank 1 lakh 80. I have solved the first two entries. But I will go slowly to explain to you if I want to do it directly, how can I do it? Okay. So, I will say in the books of Piyush Limited, I start from there. Okay. Now, if you notice one part of the question, they said show journal entries including cash items. So even for the cash entries, you show journal entries. Okay. Otherwise, we would have put cash entries in the cash book, non-cash entries in the journal. But here, everything is put in the journal. Okay. So I have to rule for a journal. Date, particulars, LF, debit rupees, credit rupees. Okay. Let's go on. First entry, the date was July 1st, 2018. So 2018, July 1, bank account debtor, two, share application account. How much? Being application money received on 4,20,000 shares at rupees 2 per share. That will give me 8,40,000. 8,40,000. Okay? I hope this is clear. Now, I do the allotment on 10th of July. What do I say? I say share application account debtor. This temporary account has to close. In this stage, receipt entry is first. Now the due entry. The total amount that was credited to share application is 8,40,000. So if that account has to be closed, I have to debit share application account with 8,40,000. And I know that number of shares issued is 1,30,000. Therefore, to share capital account, I will say 1,30,000 into 2, 2,60,000. Okay. Then to share allotment, excess application money adjusted against allotment. I have already got the working here. It's going to be 4 lakh. Okay. So I am going to adjust 4 lakh there, and other money is going to be refunded. Okay. Refunded, I know the calculation. It is 1,80,000. But let me explain this. In any other way, can I solve this? Yes, I can. People who applied for 3 lakh shares got 60,000. This was the third category. People who applied for 3 lakh got 1 for every share, 5 shares. That means they got 60,000. So, when they paid you 3 lakh for the 3 lakh shares, when they paid you for the 3 lakh shares, they said 3 lakh into 2, 6 lakh. They paid you 6 lakh. But you gave them only 60,000 into 2, 1 lakh 20. So you have 4 lakh 80 of theirs as excess application money. Now they are holding 60,000 shares minus 60,000 into 5. That is 3 lakh towards allotment. Therefore, what they have to be refunded is 1 lakh 80. 4 lakh 80 minus 3 lakh, 1 lakh 80. That is another way of looking at it. Okay? So now anyway, the entry is share application account debtor 8 lakh 40, to share capital 1 lakh 2 lakh 60, to share allotment 4 lakh, to bank 1 lakh 80, being application money transferred and excess money adjusted and refunded. This much is enough. Okay. So now let's go to the next stage. What is the next stage after application? Allotment. In allotment stage, due part comes first, then the receipt part. Okay. When is the allotment to be done? On 10th of July. Okay. Here. So on 10th of July, okay, I will say share allotment account debtor I have 1,30,000 shares on which I am expecting 5 rupees at the time of allotment. Okay. So this would be 6,50,000. Now remember, allotment includes premium 5 rupees. So 2 rupees is towards the premium, 3 rupees is towards the capital. So you will say to share capital 1,30,000 into 2, that is 2 lakh 60. 1 lakh 30 into 3, 3 lakh 90. 3 lakh 90. And to securities premium account, I will say 1 lakh 30 into 2, it is 2 lakh 60. 3 lakh 90 and 2 lakh 60 being allotment money due on 1 lakh 30,000 shares at rupees 5 each, including rupees 2 towards premium per share. When you get the money, all have paid. But how much do you collect? The total due on allotment was 6 lakh 50. You have already collected some money as excess application money. Okay? You have already collected some money as excess application money, which is 4 lakhs. So you won't collect that again. Therefore, you are going to collect only the balance. Bank account 6 lakh 50 minus 4 lakh already received, application stage. Debtor, which is 2 lakh 50 to share allotment account 2 lakh 50 being allotment money duly received. Matlab, everything is collected. There is no arrears. Being allotment money duly received. Let's check the date once. Allotment money was received on 10th. Let's say 10th only. 10th of July. Now comes the last stage. What is the last stage? Final call of rupees 5. We have already calculated that. No, 5 rupees. So, this is the last one. Date, particulars, LF, debit, credit. Okay. The last call was made on 30th April 2019. Okay. Share call account debtor. There are 1 lakh 30,000 shares, 5 each. So 6 lakh 50,000. 2. Share capital account 6 lakh 50,000. Okay? This is being call amount due on 1 lakh 30,000 shares at rupees 5 per share. There are no arrears. So we will say bank account debtor 6 lakh 50 to share final call account 6 lakh 50 being call money duly received. मतलब everybody paid. All is well that ends well. 10 marks straight to your pocket. What do you think? Isn't this topic really worth going for? 100%. Right? Okay, so let's move on. Let's look at one more sum that came for the exams in the past 1 or 2 years ago, called Konica Limited, which was registered with an authorized equity capital of 2 lakhs divided into 2,000 shares of 100 each. Issued for subscription of 1,000 shares payable at 25 on application, 30 on allotment, 20 on the first call, and the balance as and when required. Okay. Application money on 1,000 shares was duly received. Allotment was made to them. The allotment was received in full, but when the first call was made, one shareholder failed to pay the amount on 100 shares held by him. Another shareholder holding with 50 shares paid the entire amount on his shares. The company did not make any other call. Past journal entries in the books of the company to record these transactions. Let's attack this question. In our minds, we know 1,000 shares are issued. How many? 1,000 shares are issued. How are they going to be paid? 25 on application, 30 on allotment, 20 on first call. Final call is not required to be made. Okay? So how do you do this? This is just a 10-mark question. All I need is 6 journal entries. Application money received, application money due, allotment money due, allotment money received, first call due, first call received. हो गए 6 एंट्री का 10 मार्क मिल रहे यार. Come on, let's look at it. In the books of Konica Limited. Okay, I have to prepare a journal. Okay, now date, particulars, LF, debit rupees, credit rupees. Okay, any dates are given? No dates are given. Right? So कोई बात नहीं, ये डैश कर दो. You will say bank account debtor, first entry. Bank account debtor to share application account. Okay? Being application money received on 1,000 shares at rupees. Application money कितना है? 25 per share. 25,000, 25,000 debit, 25,000 credit. Share application account. ये कितना आसान है ना? Account debtor 25,000. जिलेबी है, जिलेबी. 2. Share capital account 25,000. Okay? Being application money transferred. No pro rata, no excess, nothing. Just do it. Okay, direct question. Maza aata hai. Now allotment money is due. Allotment stage, due entry first. That is share allotment account debtor. Allotment money due is 30 rupees per share. 1000 into 30. 30,000. 2. Share capital account 30,000 being below allotment money due on 1000 shares at rupees 30 per share. As easy as A, B, C, D. No? So simple. Now we'll collect the money. Everything is coming as it is. There is no locha until my first call. So here again I will say tin 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 tin. Okay. Entry number is a number thing, okay? 1, 2, 3, 4. Bank account debtor 30,000 to share allotment account 30,000. A student asked me, sir, should I write ACCOUNT or should I write A/C? So क्या फर्क पड़ता है यार, मार्क्स तो उतने ही मिलना है, टाइम सेव करो, A/C डाल दो, चलेगा. ओके. Being allotment money duly received. What is the meaning of the word duly? I have told you before. Everything has been received. There is no error. Now comes the first call. The first call money due is 20 rupees. Okay? But we do not get money from 100 shares. And one fellow holding 50 shares pays something in advance. Okay? So, let's record that. We will say share first call account debtor. I want on 1000 shares 20 rupees per share. That means I want 20,000 rupees for my share capital installment through share first call. Okay, 20,000. ठीक है? This is clear? B. First call money due on 1000 shares at rupees 20 per share. Enjoy what you're doing. Do what you enjoy. Enjoy it. Fun. Maza aa raha hai, right? Now comes the last entry. Bank account debtor. बैंक अकाउंट डेटर कितना है मालूम नहीं, ब्लैंक छोड़ो, आगे जाएंगे. ठीक है? When you don't get something, don't get stuck, move on. So I am moving on. Calls in arrears account. I did not get the money due on 100 shares. Okay. One shareholder holding 100 shares did not pay me 20 rupees per share, so he did not pay me 2,000. But, okay, so I was supposed to get 20,000. One fellow did not pay me 2,000. But to share first call account, I will close the account because I opened career account, arrears account. Okay, I will say 20,000 and I have got a calls in advance. Before it was due, it was paid. Anytime money is paid towards the shares before it is due, it is called calls in advance. Anytime money is not paid, it is called calls in arrears. Okay. So in advance, I have got 50 rupees. How much? Look, application money was 25. Allotment money due is 30. First call is 20. Therefore, the final call, look, I said 25 was application. Allotment time 30. First call 20. We have already collected 75. Therefore, what is the balance to make it 100? 25. That means I got 25 rupees as calls in advance. Therefore, this would be 1250, 21,250 total credit minus 2000 debit. I will get 19,250. 20,000 minus 2000 plus 1250. हो गया मेरा sum. Easy. Really easy. Right? 10 marks, yaar. Iske 10 marks. So you can do it. Just have to try a little more and you will be an expert in this topic. And mil gaya 10 or 15 out of 15. Okay? Let's go on. We'll talk about another question. This is the last one we are going to try on pro rata allotment. This also is an examination question. Prakyat Limited issued 50,000 shares of 10 each at a premium of 2 per share, payable 3 on application, 5 including premium on allotment, and the balance in 2 equal installments. Applications were received for 92,000 shares and allotment was made under 40,000 got 30,000, 40,000 got 20,000, 12,000 we told sorry. Simple. Krishna, who had applied for 2,000 shares of category A, did not pay any money other than the application money. Rajesh, who was allotted 800 shares, paid call money due along with the allotment. All other allottees paid their dues as per schedule. Pass necessary journal entries in the books of Prakyat Limited to record the above, assuming that calls in arrears account is maintained. Friends, you have to just attempt the question. Write all the journal entries. Here and there, if 1 or 2 entries go wrong, out of 15, you may lose 2 or 3 marks. At least you're getting 10 to 12 marks. Worth it na yaar. Attack karo. मालूम है कि नहीं वो बाद में देखा जाएगा. Just go bindas. Okay? So, understand this question. A company has issued 50,000 shares. It got applications for 92. 92, 40, 40, 12. 50, 30 and 20. Now, excess application money obviously will get adjusted against the further dues. Okay? Because application money is 3 per share and 5 is allotment money. Okay? So 3 plus 5, 8. The shares issue price is 10 plus 2, 12. So 2 rupees each on calls. Okay? Once again, issue price is equal to 10 plus 2, 12. Okay? Application, it is 3 plus allotment, it is 5. Okay? Total 8. Therefore, 2 calls 4. 12 minus 8, 4. Therefore, each call 2. Simple? Okay. Now, let's go on to solve this question. I'll start with the journal entries itself. In the books of Prakhyat Limited. Okay. In the books of Prakhyat Limited, no dates are there. So, date gaya baad mein. दो अमाउंट कॉलम, एक डेबिट के लिए, एक क्रेडिट के लिए, एक लेजर फोलियो के लिए. पर्टिकुलर्स LF डेबिट, और ये रुपीस में है. क्रेडिट ये भी रुपीस में है. ओके. फर्स्ट एंट्री बैंक अकाउंट डेटर. बैंक अकाउंट डेटर, I am getting 92,000 share applications. They are paying me 3 rupees per share. Okay. This will make it 2,76,000. Okay. 2. Share application account. To share application account, 2,76,000 being applications received on 92,000 shares at rupees 3 per share. Second entry. Okay, what is the second entry? Share application account. I want to close this account which has a credit of 276. I will debit it with 276. I know that the share capital is only towards the number of shares issued, which is 50,000 in our case. And the application money due was only 3 rupees per share. Therefore, here it will be 1,50,000. Then I know that I have rejected applications for 12,000 shares at rupees 3 per share. Therefore, 36,000 is refunded because applications for 12,000 shares got nil money. Okay. And therefore, the balancing figure gets adjusted to share allotment account. That will be 90,000. Okay. This is excess adjusted. Okay. Being application money transferred, excess and excess partly adjusted and partly refunded. Did you understand this entry? Our application money is 3 rupees per share. We got applications for 92,000. Therefore, bank account debtor to share application 92 into 3, 2,76,000. Share application account debtor 2,76,000. मुझे close करना है वो account. That account is a temporary account. And I know that number of shares issued is 50,000. So 50,000 into 3 goes to capital account. 12,000 I did not give any shares, so that is refunded. Balancing figure is adjusted towards allotment dues 90,000. Okay. We'll go to the third entry, which is allotment money due. Allotment money due is 5 rupees, which includes the premium of rupees 2. Okay. So, share allotment account debtor 50,000 into 5. 2,50,000. 2. Share capital account. Remember, this is the due entry, not the receipt entry. Okay. Share capital account 50,000 into 3. 1,50,000. 2. Securities premium. Account 2 rupees per share on 50,000 shares. That would be 1 lakh. What is this being? Allotment money due on 50,000 shares at rupees 5 per share, including rupees 2 premium per share. Okay, Ji? Clear? Third entry is clear? Fourth entry. When I receive the money, remember, Krishna does not pay any other money other than application money. Rajesh paid call money due along with the allotment money. Okay? So, let's go to this. I will say bank account debtor. Bank account debtor, I don't know. Move on. Calls in arrears. This also I don't know. This is Krishna ka. Okay, I will find out. Working note 1. Okay, debtor. 2. Share allotment account. 2. Calls in advance account. One person, Rajesh, who was holding 800 shares, he was allotted 800 shares, he paid the call money along with the allotment. Okay, call money is 4 rupees. So, he pays on his 800 shares 4 rupees. So, he is paying you 3,200. Share allotment account. Look, I was supposed to collect 250. I have already collected 90. So, I have to credit 1,60,000 to close the account. 2,50,000 minus excess application money already collected 90,000. I have to credit 1,60,000. Abhi इन दोनों में I have to find out what is to be returned. So let's calculate Krishna's dues. Okay, I am going to calculate Krishna's dues. Working note 1, calculation of Krishna's dues. Okay, look, amount paid by Krishna. Okay, Krishna applied for, we are told Krishna has applied for 2000 shares of group A. So amount paid by him is 2000 into 3, 6000. Okay. What is the application money due? Now, applied 2000, allotted how much? 2000 into group A is 40,000 shares, got 30,000 shares. So 30,000 divided by 40,000. Okay. If you apply for 40, you will get 30. So if you apply for 2, how much will you get? 1,500. This will be 1,500 into 3. Therefore, 4,500 is towards his application money. Therefore, excess application money adjusted is 1,500. Now, allotment due will be on 1,500 shares, because now he is allotted only 1,500 shares. He was supposed to pay 5 rupees per share, 7,500, but excess application money is 1,500. Therefore, his net allotment dues were only 6,000. Okay, so I can write calls in arrears 6,000. This will be the balancing figure. 1,57,200 can be my balancing figure. Okay, being share allotment money received on how many shares were issued? 50,000. Number of shares issued to Krishna is 4,500. So that will be 45,500 shares, and excess and rupees 4 received in advance for 800 shares. Okay. If you want me to double check this 157,200, I can double check. How? Look. Money received on allotment. Okay. Total due was 2,50,000 minus 90. 1,60,000. Okay. This is for 50,000 shareholders. Therefore, for 45,500, how much? So, if you look carefully, $1,60,000 was supposed to be paid by 50,000 shareholders. That is 3.2 per share. So 45,500 into 3.2. If I do this, how much will I get? Okay, I will get 32 into 5, 16. 32 into 5, 160 plus 6, 176, 17. 32 into 4, 128 plus 16, 148, 600. Plus add calls in advance I got on 800 shares at 4 each, 3,200. Okay. Therefore, I will get I will get 154 from here. 157 200 is the total. This is one other way of doing it. Okay. So let's come back. Here, this is the easiest way. Balancing figure 1,57,200. How would I get this balancing figure? Look, calls in arrears of Krishna, I did the working note. I said 6,000 was money received from him on application. 2,000 shares he applied for. So 6,000 he gave you application money. But you gave him only 1,500 shares. How 1,500? Because he belonged to the group where those who applied for 40,000 shares got 30,000 shares. So he is getting only 1,500 shares. Now he paid you 6,000, but you gave him 4,500 worth application. Therefore, 1,500 is his excess application. Allotment time, he's supposed to pay 1,500 on 5 rupees per share. On 1,500 shares, 7,500. He's already paid 1,500. Therefore, his net allotment due is only 6,000. Okay? That is why I said calls in arrears 6,000. Total allotment money due was 1,60,000. 2,50,000 total due minus advance excess application money received of 90,000. So 1,60,000. And one man holding 800 shares pays all the calls together with the allotment money. 800 into 4, 3,200. Therefore, my balancing figure is 157,200. Okay, Ji? Wow, good. Let's move on to the next stage. First call. Share first call account data. There are 50,000 shares. I want 2 rupees per call. So 1 lakh. Okay. 2. Share capital account 1 lakh. Being first call due on 50,000 shares at rupees 2 per share. 1 lakh. Now let's receive the money of first call. So entry number 6. I will say bank account data. Look, there are 50,000 shares. Okay. I will not get 1,500 of Krishna. I will not get on 800 shares of Rajesh because he's already paid. That means I am going to get only of 50 minus 1500, 48,500 minus 800. That will be 47,700. I will get 2 rupees from them. Okay, I will not get on 2,300 into 2, 4,600. I will not get. Okay, I was expecting 1 lakh. I will not get 4,600. I will get 95,400. Then I will say calls in areas. This is on 1,500 shares of Rajesh, Krishna, which I am not going to get. Calls in advance. I will adjust the advance amount received in the previous occasion, 800 into 2, 1,600. That is 1 lakh. 2 share first call. 2 share first call account, 1 lakh. Okay, being first call money received on 47,700 shares and advance adjusted on 800 shares. The same way, the same entries will come for share final call. 7. Share final call account debtor. I have got 50,000 shares. My final call is also 2 rupees, same amounts. 1 lakh. To share capital, how much? 1 lakh. Right? Now, we will say being final call due on 50,000 shares at rupees 2 per share. Okay? When you receive the money, this entry will be duplicated. Okay? But only we'll call it share final call. Bank account debtor 95,400. Calls in arrears account debtor 3,000. Calls in advance account debtor 1,600. Same thing. 2. Share final call 1 lakh. Being final call money received and adjusted. हो गया. That's all we have to do for this sum. Please practice this again. Okay? Nothing works like practice. Practice, 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 because practice makes you perfect. Thank you.